All right. Hey, everybody. Welcome back to this week's interview series with top investors. Today we have Jeremy Burton sitting with us. I haven't yet had someone sit in and share about the VC studio model. So that's going to be the topic of discussion today. He is a studio model expert. Jeremy, prior to building Platform Studio, he is a 10x serial entrepreneur and has enjoyed building startups for the past 30 years and built his first company at age 14, which I totally want to ask questions about. That I did not find in your bio. Over his career, Jeremy has worn many different hats, spanning from engineering, product design, corporate development, sales, and venture. Most recently, he co-founded Wonolo, the leading on-demand staffing company that's backed by leading firms such as Sequoia, Bain Capital, Crunch Fund, and this is where he served as CTO. I also love that you call CTO Chief Therapy Officer. Haven't heard that one before. And all of this experience has led him to create Platform, which encapsulates all his learnings in building startups into a repeatable process to help the next generation of founders succeed. I love that mission statement. Thank you so much for joining today.
Thank you for having me.
Yeah. Well, before we jump in, to many people, the studio model is very elusive. My first introduction to venture, I learned about the studio model, and that's what actually got me intrigued about continuing my career in VC was this novel idea of what is a studio. But a lot of people don't actually know what it is or the ins and outs of it. So I'm going to share some brief stats too, because they're pretty staggering in the differences of efficacy, quite frankly, in the VC ecosystem. So unlike a traditional venture capital firm, which typically focuses on investing in a founding team's validated idea, a venture studio focuses on forming and validating startup ideas, then building and launching them into the market with the founders. Yes, I stole that from your website. And here are some crazy facts that I found as well. Venture studio startups have a 30% higher success rate than traditional startups. 84% of startups coming out of studios go on to raise a seed round. 72% of those ventures make it to Series A. Time from zero to Series A is 25.22 months for venture studio startups compared to 56 months for traditional startups. And the average IRR for startup ventures is 53% compared to 21.3% for traditional startups. So there is obviously some value here, and I think people don't really understand it or think it's very elusive. So I'm really excited to have you today. I think my first question is just what inspired you to launch Platform Venture Studio back in 2020, I believe?
Yeah. Well, I think I got to a point in my life where I really wanted to give back. I wanted to help this next generation of founders succeed. And I saw founders struggle again and again through my own life as a founder, my life as an angel investor, as an advisor. And I think we all see these reports that are published by outfits like CB Insights that talk about the reason that startups fail. And they talk about the startup may have run out of cash or failed to find product market fit. But really, for me, those are not the root causes of the problem. And I really was kind of intrigued to understand, okay, why do they run out of money? Why do they end up building a product that no one wants to buy? Why do they end up being outcompeted? And I think in my mind, a lot of those root causes relate to two things. Number one, a sort of confirmation bias, or what I would call passion blindness around a founder's idea, that they really fall in love with their own baby and they become deaf to counter voices that may point them in a different direction. And the other thing that the other root cause that I see is that founders honestly just struggle doing a lot of things because they've not done them before. They lack experience in doing those things. But the irony is that many of those things that founders end up having to do have no relation to the problem that the startup is trying to solve. They are incidental, and there's no reason for them to be good at them or learn how to do them. So the thesis behind most venture studios, including Platform, is what if you could take a team of experts, a network, a methodology for building companies, and some capital and wrap that around a founder, and by doing that, massively increase their chances of success, get them more quickly, see them have fewer unforced errors from their inexperience, and really take everything off their plate that isn't core to finding product market fit. So that's the core thesis. And one way of summing it up is, if you think about traditional venture capital, it's still very much the mentality of picking winners. Mm-hmm. With venture studio, it's really about making winners. And that's the kind of the key difference in understanding the core of both models.
That was one of my questions too, is that many VCs, especially at the earliest stages, lean heavily towards the founder's potential rather than the idea itself. And, it sounds like, I don't know, do you tend to weigh the founder's vision and drive more, or is the idea's market viability your primary focus, or is it something else? What do you guys really look for?
Well, I think there's lots of different ingredients that go into the success. There are really three, I think, core things in that recipe. There's definitely the founder. There is the unmet need or problem that you are trying to solve. And then there is also the why now. Mm-hmm. Why is now a good time to solve that problem? And those are the three main ingredients that we kind of cook with, if you like. Of those ingredients, I would absolutely say that the founder is the most important ingredient. It all starts with that talent and finding founders who have the right levels of coachability, grit, smarts, empathy. Those are the big four that we look for to be great founders. One of the benefits of this venture studio model is you can decouple the founder from the unmet need, and that gives you a lot of flexibility. Sometimes you find a founder and they're already passionate about an unmet need, and you sort of take the two as a unit, which is much more like traditional venture capital. But often you will source an unmet need from your network, and then you will go out and look for a founder that is a good fit to work on that, and you'll kind of match the two together. And sometimes, and this has happened recently with us in a very good way, is a founder comes to you with a particular idea, you love the founder, but you don't like their idea, and you're actually able to reassign them to a different idea. So that flexibility and the matching is actually a big part of the value of the model, I think, is you don't have to sort of take the both together and bet on both at the same time.
And so what other qualities are unique to Platform compared to other venture studios? And I mean, I know you can't share your secret sauce, but what does the process look like after you have all the ingredients? Then what?
Yeah, I mean, I think there's a few things that make us different. I can't say that we're different to every single other venture studio in every single way. And I think it's a certain truism that if you speak to 10 different venture studios, you'll get 10 different answers as to what a venture studio is exactly.
Yeah.
But for us, I think the first thing is that we are very much focused on building in the open. We're kind of the antithesis to stealth mode. And the reason for that is we just think that the later you delay talking to the world about what you're building and why you're doing it, the later you're delaying getting feedback on what the market really wants, and the more capital you're putting at risk. And for every company that emerges out of stealth mode to be successful, I would argue there are 100 that emerge out of stealth mode to realize they built something that no one actually wants or isn't the thing the market needs. So you can see all of our companies on our website. They're publishing weekly updates on everything that they're doing. They're publishing and sharing their metrics, so you can follow along on the journey. And there's just an extreme view of that transparency. Along with that, we're obsessively data-driven. I think this is probably my background. I think about things as sort of systems problems or engineering problems in some ways. So we're very focused on instrumenting each company we build from the very earliest stages and being very driven by the data that we see. That has been just a big factor in our success, as I see it, and just will always be a big part of the playbook. More of a accidental feature is we're 100% remote. A lot of venture studios or accelerators, have a co-working space. I think pre-COVID that was absolutely the way I would have done it, and it's a great way of sort of gradually bringing people in. You say, well, maybe you don't have anything to do yet, but come in, use a desk, use the coffee machine, and kind of listen, and maybe we'll make that connection. We had to make it work because we started during the pandemic. It was very hard to build relationships with founders remotely, but we've worked out how to do it, and we've decided to stay remote. So in fact, I've met in person less than half of the founders that we have in the portfolio. We've just built the whole process and the whole way in which we work and the culture and the sort of norms in communication all around remote, and that's opened up us to just a much bigger universe of talent than if you had to kind of focus on a geography like the original, Techstars playbook or something like that. The last thing is a real focus on marketplaces as a business model. Platform is called platform for a reason. I've had a lot of success in my career as a founder, as a marketplace founder. We have a playbook for building marketplaces. They're very hard to get going. You always have the chicken and egg problem and problems with kind of balancing supply and demand, but we know how to do that. The great thing about marketplaces is once you get them going, they just have very strong network effects, so they tend to be very hard to catch once you kind of get the engine started. So we focus there, and we do a bit of B2B SaaS, but it's mostly a sort of B2B2B or B2B2C marketplace that we're building.
And sometimes when I share about the studio model, they think it's a scam, founders. Can you share, and I do think that there are some studios out there that are a little bit scammy in terms of, equity stake, but that's not all of them. So can you share what are some common misconceptions about the studio model, and how do you guys, what are your thoughts on that, and how do you not do it that way?
Yeah, I mean, I think there are two there are two big ones, and these are not a surprise, very, very kind of commonly heard. Although I think, as you were saying, I mean, the model is growing very quickly, and I think there is just more and more understanding and acceptance. I mean, I think first of all, there's this idea, especially in the minds of traditional venture investors, that there's a negative selection effect of founders, that the best founders don't need a venture studio. I think the reality is that traditional venture and venture studio are not competing over the same pool of founders. What makes a great founder for the venture studio model is not necessarily what makes the best founders for traditional venture. I think with traditional venture, and I say this as someone who's been a traditional venture founder myself many times, is I think there's a certain stubbornness and a sort of preference to learning by doing and failing and working things out from first principles that sort of comes with the traditional venture targeting. There's a sort of sense, and I'm overstating it for effect, but there's a kind of idea of, you find some really smart people, you throw some money at them, and they kind of hope that they work it out, and some of them will and some of them won't. For a venture studio, we really index very, very highly on coachability, because there's no point in working with a venture studio if you're not willing to follow through the methodology and listen to the experts and use all the resources and the syllabus and the training that comes with it. So I think a different kind of founder succeeds and should seek a venture studio. I mean, I think it's solo founders primarily, because otherwise it's quite hard to make the equity split work. But we have many second, third, fourth time founders, some of whom have had prior exits, who want to work with us. And it's actually in some ways an easier sell because they know how hard it is.
Yeah.
They know they need help. They know they need support. I don't think we're competing for the same founders. So I don't think it's about the worst founders in a spectrum. I think it's a different kind of founder. On the equity piece, it is obviously a big thing, and I think it's a psychological thing for any founder to think about, how much of their company they're giving away. It's important though to understand that, if you have 100% of $0, that's $0. If you have 10% of $10 billion, that's $1 billion. I mean, it ultimately comes down to what is that? What do you own when you exit, and how likely you are to have that exit. So when you actually run the numbers of a studio, although it might take a chunk of equity, it doesn't have to be that much better in terms of the failure rate, the dilution, the valuations you get in each round, or the time it takes for you to get there, for it to more than pay for itself in terms of the end-to-end life of the company. So the sort of headline of how much we take up front, I think is very misleading in terms of the value of what you end up with at the end of the process. So we really kind of try and think of ourselves as a great co-founder. I mean, you could, as a solo founder, you could go and find a co-founder in a single human being, but we as a co-founder, we don't take a salary. In fact, we pay you. You get a whole team rather than just one individual. We can lend the company more money if it needs it. We coach you. You get a breadth of resources and expertise you'd never get in one individual. So we like to think of ourselves as a really kind of great co-founder. But I think the key thing is to think about not the percentage you own, but what the likelihood is that you'll exit. And then I think it makes a lot more sense.
Definitely. I mean, those stats kind of prove that. I was blown away. Well, what do the founders do for you? You obviously do a lot for the founders. What do you get out of these relationships when you guys kind of have, you're a well-oiled machine at this point?
Yeah, I mean, I think the reality is that however good we are, however good our process, however well connected we are, the founder is the sort of core engine that's moving the ball forward every day, every week. To be a successful founder, you need to be all in, and you need to have this one passion and this one thing that you're focused on 100%. And there's just kind of no way that anyone within the studio could do that. So that's really what they are, is the kind of engine that moves the whole operation forward, with us in support and advising and coaching and providing these resources. So, I mean, practically what that means is we build startups through a 4-stage process. The first stage is they will come to us, or we'll find them, and they'll either come with an unmet need they want to solve, or they'll be matched to one. And they'll do a very simple exercise. If people are familiar with the sort of lean canvas approach, it's a very similar kind of model where they'll lay out what's the problem they want to solve, why now, what are the channels to market they'll use, what are the likely unit economics, what do the competitors look like, how much money do they think they'll need, what are the biggest risks. And they'll present that to us. There's about a 5% pass rate at that point. And if we decide, and it's a very lightweight process, if we decide to proceed with that founder unmet need pair, we then go into stage 2 of the process. And stage 2 is a 4-week process. We pay the founder for that work, and they basically do very, very deep customer discovery, competitive diligence, and really flesh out a lot more around that concept. And at the end of that 4 weeks, they present that to us. We may say, needs more work, and send them back. We may say no, we may say yes. And there's about a 50% pass rate at that point. If we decide to green light it, then it's on. Then we bring our engineering and product resources, design resources to bear. We build the first version of the product, and we work with them to kind of grow the company from there. So they're really kind of, all participants are like gradually, at quite a fine-grained level, increasing their level of commitment and investment, in keeping with their level of conviction. And again, I think that's really another great thing about the venture studio model, is you're able to very kind of carefully meter out your commitment as you kind of get the conviction through the process.
Well, it sounds like whether or not, you take them on or not, you're still helping them figure out, is what they're building startup scale. So it seems like a win-win
Absolutely.
to me.
Yes, absolutely.
And you're paying them to do it, which, seems like a lot of value. Okay, you say that you go out, you have a lot of people, I'm sure, who fill out this unmet need form, but how do you go out and find these founders? Let's say, I post something on LinkedIn. Is it something about the way I'm engaging with you, or what are you looking for?
Yeah, so it's a great question. When we first started out and we didn't have a name, it was much more like a traditional hiring process, almost like executive recruitment, where we would go out and we would, hire the founder based on our criteria. The luxury of having, been more visible and having done this for a few years is now we do have quite a strong, just kind of inbound stream of applicants all the time. There are a couple of things that we're, first of all looking for. We want people who have at least some idea of what it's like to be involved in an early stage startup. So they don't have to be second-time founders, but we do look for some period of time spent at a high growth kind of venture backable startup, because there are a lot of people out there that have a very naive idea of have a kind of romantic view of what it would be like to be a startup founder. And the reality is that it's a horrible job. I mean, it's a grind. You're making a lot of very difficult decisions with very little data. All the worst jobs come to you. So we want people who look like they have some sense of what's involved and they're not kind of being unrealistic about it. And then, we're looking for people who, are solo founders primarily, again, because of the equity, and people who, have a clear view of kind of the why, right? What is their story and how does it relate to what they want to do and why they want to be a founder? Once we actually engage, once we've kind of whittled people down to people who actually want to have significant engagement with, we use a few kind of models to model them. There's what's called the 5-factor or ocean personality model, which is probably, there's a lot of bunk out there in these psychographic profiling models, but the 5-factor one, this ocean model, is one of the most researched and kind of scientifically rigorous models. So we look for certain things in terms of extroversion, introversion, and other kind of attributes in people that we think correlate with success. The rest of it is really just about spending time with that person and kind of both sides feeling through, is this someone that we can work with effectively? And it has to be a two-way street. They have to see that they can work effectively with the platform team as much as we feel like we can work with them.
100%. I think my last interview with Madhu and Hans, who a lot of it was you play the long game, and the long game is really centered around how do you show up with integrity and build community. That's like Silicon Valley boiled down, especially when you have folks who've been doing this. All the successful early stage founders are now the ones helping other people, grow and scale their companies. So the long game is definitely here, and I see how that plays out in the studio model as real true resources. I'm curious, what 3 key pieces of advice do you consistently find yourself giving early stage founders?
Yeah, I mean, I think one of those would be what I touched on earlier, so I have to think of an extra one. But, I think first of all, I'll just repeat it anyway. I think it bears repeating. I mean, become a founder for the right reasons. This is not a lifestyle choice or something that you take on because you think it's kind of cool or you've got a romantic idea of what it'd be like to start a company. It's just unrelentingly hard, long hours, all the worst, most difficult problems to solve come to you because no one else wants them. It's hard, and you have to have a lot of grit, and you have to have a strong reason to be doing it in order to, get through it without giving up.
Yeah.
So I think the next thing I've touched on before as well, which is, confirmation bias will kill you. And I think understanding the psychology of other people, that, honestly, most people want to be nice, even strangers, right? Your friends and family are definitely not going to give you an unbiased assessment of your startup idea. But even complete strangers are also going to avoid calling your baby ugly. So, you have to be very, very careful when you're talking to people that you don't lead the witness, and design your customer discovery and design your customer interviews in such a way that you're not putting words in their mouth or hearing what you want to hear. And then just realizing that even when you do, what people say they're going to do is not necessarily what they end up doing. The number of times that people say they would they would pay for a product if you built it and then actually don't when you built it is very, very high. So that confirmation bias is a huge issue. Another one would be just the value of simplifying. The idea of you're done when you can't take anything else away rather than when you can't add any more. And the way in which this manifests itself more than anywhere for me, just week to week, month to month, is pitch decks. My number one piece of feedback for every founder reviewing their pitch deck is, can you take away half the words on this slide and then take away another half when you're done? It's just the ability to distill things down to just the most simplest things so that they're very easy to understand and you become very, very focused. I'll give you one more since the first one was kind of already mentioned, is one of the things that founders tend to do early in their journey is they worry a lot about competition. And I always say, don't sweat the competition, sweat your customers. You win by making happy customers, making them happy so they stick around and keep paying you, and so happy that they recommend you to other customers. And worrying about other competitors will just distract you. So stay focused on the customers over competitors every single time. Those are some of the big things that I find myself saying very frequently.
I mean, a huge piece of my business is how do you take the chaos that's in a founder's head and make it clear, concise, and compelling with very few words and in, maybe 14 slides. It's hard. It's like almost impossible, right? Especially, when I go out and build my website, it's hard for me to get everything out. It's hard to have an objective viewpoint, especially a viewpoint of a VC, right? That's not in their inherent nature, and it's really difficult. Every piece of this is really difficult. So even more value for the studio model. All right, last question before you leave. Could you tell us about a time when you were hesitant to invest in a company idea, but it ended up being a significant success, and what initially convinced you to take that gamble?
So I can understand why you're asking the question, but I think this is actually where the studio model wins, because you're actually not faced with that choice of I'm all in or I'm not. It's not like you have to give the founder $2 million and hope they work it out. You're able to very carefully engage on an idea in a founder and incrementally invest more money as you go. So I have the ability to exit the effort at any point along that journey, which means I'm not really kind of making those gambles. I think, again, it also comes back to that sort of picking thing. And if you think about it like on betting on horses, right? You're not picking a horse or you're picking a jockey. You're the trainer. You're training the horse and the jockey. You're making a winner. You're not picking a winner. So we start out with very small investment, just paying that founder for 4 weeks to do the customer discovery. I mean, it costs us less than $20,000 to get a very strong signal, if you think about it, versus traditional venture, who's just investing based on a deck and a bit of diligence. This is like working very closely hand in hand with the founder, really doing the work, and for very little money, getting a very strong signal that then unlocks or doesn't, further investment. So I don't view it as a gamble. I view it as a sort of experimental, incremental process to discover what the market needs.
Certainly, yeah. I always tell founders, too, that sometimes they complain about doing certain slides, like their market slide. And what investors want to see and hear is, what is your thought process? How are you thinking about this? And it sounds like you do that very intensely, and that's a great indicator is, okay, they're thinking about it this way. They might not have everything figured out, but their thought process is aligned with the scalability and how we do things. And I think that gets overlooked sometimes.
Yeah, absolutely. We talk a lot about the sort of minimum viable experiment. Like, what is the smallest thing you can try that will give you sort of significant and meaningful data to make the decision about the next thing you do.
There we go. Anything you want to leave with our founders or other studios, VCs, before I let you go?
I think I really enjoyed the conversation. I think if anyone is interested in learning more about platform, being a founder, realizes they need help, then you know where to find me.
Yeah, now I want to apply. Like, this is a lot of value. Maybe I'll just go apply. All right. Thank you so much, Jeremy. And thank you, everyone who's watching and listening. And we'll see you next week.